right, we are back with some Bitcoin technical analysis, and here I'm going to be discussing how insanely monumental this close may be. This is a close below the 100-week moving average right here, the 100-week moving average, and we're closing below some other supports I'll talk about soon, and I will talk about where I think the bottom may be at when we do have the floor fall out below us, which right now, as you can see, obviously we are seeing a floor fallout because we are potentially closing below these weekly support levels. The weekly low was at around 36K, so we are closing below that weekly low. And as you can see, those weekly candles, when we went below here before, had some wicks that were bought up pretty quickly. Right here, we are not seeing that same exact buying demand because we've tested it so many times. The buyers are losing steam. And it looks like a lot of these people are probably going to give up. And I'll show you what the giving up looks like. So whenever we close, and this is through past times that we have gotten decisive close below the 100-week moving average, we look at March of 2020. March of 2020, the floor fell out very quickly. It fell out within the same week. That was kind of a black swan event, though. That was kind of like a crisis moment of COVID. That was probably a bit of an outlier, but still, the floor fell out and everybody capitulated during that moment. A more prominent example, a more natural sort of drop was November of 2018. And as you can see, we did close one daily below the 100-week moving average. And look at the following week. We just dumped straight into that zone. We dropped into that 200 weekly moving average zone right here. As you can see right here, the 200 weekly moving average zone is between 27 and 21K, 21.8. So between 21.8 and 27K. So, and if we look at some other moments in Bitcoin's price history, we should look also at the 2014 bear market. The 2014 bear market was a bit slower. 2014 bear market, maybe we should see, maybe I can go to the BLX chart, because the BLX chart has a lot more time back. It also has the stinking, it looks like right here, when we close below, we had a couple of fake downs below, so who knows, this could be a fake down, which honestly I would hope it's a fake down, because then I can accumulate some more stables before I have to deploy them. But as you can see, after that decisive close, the floor fell out about a month later. So that one took about 4 weeks for the floor to fall out and to get to that zone. But in that scenario, though, the 100 week was a lot higher than a 200 week. Right here, the 100 week was a little bit closer, and right here, it's a little bit further. So who knows? Maybe it might not be next week, but I would honestly not be shocked whatsoever if the next weekly close is below 28,000. I could 100% see that. And actually, I think it's decently probable that it might actually happen. And I'll also talk about some other analyses to kind of say where I think the bottom may be. And that is drawing out the Fibonacci levels. And here's the other thing. We have closed below some pretty important support levels in terms of not only market structure, but also Fibonacci's. Fibonacci's is kind of my favorite thing to analyze. As you can see, the 0.786 Fibonacci level from low to high is at around 35K, and it looks like we are Oh, this is getting bought up. Oh, wait, no. Yeah, no, it's, I was going to say, oh, it went back up there. But yeah, no, going back to this chart because this chart is more updated. Yeah, 35K was the 0.786. We broke below that. If we look right here, and then the next Fibonacci support is at, from this Fibonacci perspective, from March 2020 low to high, we are also breaking down below the 0.236 Fibonacci level as well. 0.236 is right at 35K, and as you can see, we are also breaking below that Fibonacci support level as well. So not only are we breaking below that Fibonacci level, we are breaking below there. So the next support level that I could see us going down to and finding at least a little bit of support is that summer lows. But what I'm actually looking for lots of support and the potential bottom is this $23,000 level, 22.9 to 25K. Within this zone, I will be extremely bullish, and it's kind of coming in confluence with the 200-week moving average zone as well. It's coming in confluence with there. If you also look at some other TAs, there's so much more confluence down in that zone. It's quite ridiculous. We draw out this bear flag. Right here. Draw something like that. Quick little iPhone TA. And then we draw the stinking line down. So we draw the flagpole. And as you can see, this bear flag target is also coming down in that exact zone as well. The bear flag target is coming down in that zone. And as you can see, we are definitely breaking that bear flag decisively. We are breaking down for sure. And then also looking at some other things, some fundamental things too. Sailor's liquidation price is right at around that zone as well. And honestly, I think that Sailor could get margin called. He could get liquidated. And I will be buying that liquidation for sure. And if you look at some other instances, we should also look at some past corrections as well. And look and see that, Bitcoin loves bottoming out at that sort of Fibonacci zone. As you can see right here, if we measure from low to high right here, as you can see, we bottomed out at that 0.382. We did wick a little bit below that. And I kind of measure it from where it stabilizes. And if you look right here as well, I think this is approximately where Bitcoin bottomed as well. Yeah, it was around that $2 zone, I think. Yeah. If you look as well, we didn't quite make it there. But if you look kind of where we stabilized, we also bottomed at that exact zone, that 0.382 zone. Kind of right there. We didn't quite make it there in what was it, 2014. Yeah, we didn't really make it there from the wicks, but there was a ton of wicks at that time as well. And looking back, also, we should look at some stock market graphs too to kind of show exactly how insanely, and I also think that stocks, the S&P, will bottom at the 0.382 as well. Because if you look at the stock market, let's go back to the 70s and let's kind of just compare all these corrections right here. So all the major bear markets that we've had since 1974, and I think we should go to the monthly because this is a huge macro view. When we go towards this bottom right here of the stagflation period, we first found a bear market back in 2018 or 1980s. So when the 1980s first began, we went to a recession. Where did that recession bottom out at before we started trending up again? The 0.382 right here. And now let's look at the next major crash. The next major crash was 1987. And if you look at the 1987 graph right here, where did we bottom out at? We bottomed out at the 0.382. Look at that right here, 0.382. Let's also look at the 2020 crash, or not the 2020 crash, the 2000s. As you can see, the 2000s sort of had like a double bottom deviation sort of deal. But if you measure this to the 2000s top right here, if you measure it from the 2000s top, look at where we bottomed out at the 2000s top. We bottomed out at the 0.382 Fibonacci level. As you can see, we bottomed out at that same exact zone. Little wick down there, not too bad. And then let's look at the next time we had a decent sized correction. I think the next decent sized correction was 2011. 2011 was actually a pretty decent correction. Where was 2011? 2011 was right here. People forget about 2011. That's where commodities just dumped like crazy. We went down 22% there, and commodities did not do very well. Commodities went down by like 70-80%, which is kind of crazy that silver went down like crazy. But if you look right here, that same exact crash bottomed out at the 0.382 Fibonacci level. And then we go towards March 2020. That was the next significant crash after 2011. The March 2020 crash, let's see where it bottomed out at. Where was the wick bottom at the March 2020 crash before the Fed was like, oh, let's print so much money. Oh my goodness, look at this. The wick bottomed out literally at the 0.382 Fibonacci level. You can't make this stuff up. You literally can't make this stuff up. We trade like Fibonacci's. It's absolutely insane. The people that run the markets don't. The people that really move the money around in the markets, the majority of the money is not looking at these fibs, like I am. But it just trades within these fibs. It's insane. And now let's look at where stocks may bottom out at, which I think this is going to be a decent sized correction. I do think that we will be in recession territory this quarter. We are already in a recession. I do have to say it. I do admit we are in a recession right now, but look at where I think this recession could bottom out at. 35.60, 35.77, 36.68. I think we could bottom out here, and it looks like the 50 monthly moving average is kind of coming in confluence with that. I don't think that recession means we need to go into 2008 territory, because as you can see, recessions like stinking in the early 1980s are certainly possible. And we also had a mini recession back in the 90s as well. If you look at the 90s as well, where did the 90s bottom out at? The 90s also, I think, bottomed out at the 0.382 as well, as you can see. The 90s also bottomed out at the 0.382. It can be more some like that. And I maybe didn't consider this, but it wasn't that far away from the 1987 crash. So yeah, it doesn't have to be exactly like 2008 whatsoever. It doesn't even have to be anywhere close to like 2008. It can be just like 1989, 1981, or 1989. I don't know if it's going to be as steep as 1989, but it could be in the same magnitude of 30%. So maybe like 35%. And right now we are sort of trading a bit, or kind of halfway through it is what I'm saying. I think we are halfway through this correction, because if we actually do look at what did the Fibonacci suggest? Is this halfway through? Yes, we are halfway through this correction. That's sort of how I view this. And is that the same thing with Bitcoin? I think we're a bit closer with Bitcoin, because Bitcoin kind of does lag with the stock market a bit, or lead the stock market. The stock market lags with Bitcoin. So we're about 61.8% of the way there. We're almost at 61.8% of the way there. So we're 60% away from what I think is the bottom on Bitcoin. On the stock market, we're about halfway through. I don't really care about some of these other, like gold and oil and all, except oil. Oil. It's overbought on the monthly, though. The monthly RSI, those are always significant tops. Anyways, getting off topic here, that's sort of what I think. I think the floor could be falling out very shortly is what I'm kind of getting at. This is why I made this video, is that the floor could be falling out very quickly because we're losing a lot of these moving averages. We're also losing the monthly 20 moving average, and we're breaking it with conviction. And look at that. Big dump when we close the monthly below there. Look at this. Big dump when the monthly closes below there. Monthly closes below there, thick dump, pretty fast. Pretty fast dump when we drop below there. The floor falls out pretty quickly. Right here is a bit slower, and but these other instances like 2018, we kind of just dump straight there. We just go straight free fall to these 50 monthly moving averages supports, and for monthlies, it's a bit divided by 4, sort of, from the weeklies, like divided by 4. Divide by 4. Whatever, it's divide by 4, divide by 5, because the 20 is divided by 5 from 100. Whatever. What am I getting at? Anyways, that's all I really have to say. And also for alts, I think alts are pretty bad in bear markets. I got some very bearish targets at around 47, 42, and potentially even like 23 for Solana. A lot of these other alts. I got so many alts just for the funs of it. Link is below $10. Oh my. Oh boy. So Link is below $10. AVAX is at $50. A lot of these other ones that I just like to look at because of how crazy they are. AXS, look at this. XC Infinity is now down around 83%. I remember when people were saying, funding's negative at $100. I remember people were saying, funding's negative. It's about a moon. Oh boy. You better pay attention to funding. Negative funding means bullish. Because it was the most shorted coin. Look at all these others like Dogecoin. When you look at it, the floor falls out for these altcoins. When Bitcoin drops, these alts drop way harder. So we got that. We have stinking XRP. Look at XRP. It's just been straight down. Litecoin below 100. ADA is the floor's falling out. I think ADA targets could be at $30. So I got some extremely bearish targets. I don't even I just do some of the alts for fun, just because it's a bit fun. Matic, I think Matic could go way lower as well. I think we can revisit 30 cents for Matic, if that sounds crazy enough to you. 30 cents for Matic. Just so many bearish targets for all these altcoins that I have. And to look at some histories, and a lot of these alts don't really have much history on their charts, but I look at the altcoin ADA market cap, and as you can see, ADA dropped by 80% right here. Drop by 80% doesn't mean you can drop by another 80% and another 50% after it's dropped by 80% 2 times. And that's how alts can perform when Bitcoin kind of dumps. I don't think we're in a 2018 style bear market, so who knows if the majority of alts are going to look like this, but a lot of them will look like this in this Bitcoin drop, and a lot of them are already at their first 80% drop. But just because it's down 80% doesn't mean it can't go down another 90% from there. It doesn't mean it can't go down another 90% at all after it's dropped by 80%. especially when people don't want to buy Bitcoin, a lot of what they're going to sell is alts, and there's going to be absolutely zero demand for these alts, but there's going to be a lot of selling demand for those alts because those are kind of the back road risky, and it's also extremely oversaturated. If you look at some altcoins from back in the olden days, we can kind of see what a lot of alts will trend towards. I can't really think of alts on the top of my head from back in the early days, but most alts are going to trend to zero. Bitcoin trends up with time, as you can see. Bitcoin trends up with time long term, but alts generally trend to zero over time. And actually, let's look at the Litecoin versus Bitcoin chart to kind of show. Litecoin Bitcoin is kind of the best chart to kind of describe what alts are long term. If you look at Litecoin Bitcoin, it is trending to zero. Alts trend against Bitcoin to zero, most of them over time. It's just a systematic downtrend, yearly downtrend. If you look at the 12-month time frame, it's literally just trending towards zero. But let's see, how long have I recorded for? 21 minutes, so it's a little bit rambly. I'm a bit of a rambly person when I speak. That's honestly why I don't like making TA videos on YouTube, because I just go all over the place. I kind of just go off on tangents, and I do this tangent, I do that tangent. I don't know. I'm just not don't have very speakual structured mind, if you say that. I'm more of a guy that that if I were to kind of make like a speech or whatever, and it's not scripted, I go off on tangents, and I just go off on tangents and more tangents, but whatever. I am going to complete this video, not make it too long. Bitcoin looks very dumpy. That's what I'm going to say. Bitcoin looks very dumpy, and it's very poised for some of these much lower support zones, or slight lower support zones in the 20s. And a lot of altcoins and stock markets are stock markets are halfway through the correction. Bitcoin is 60% through the correction, heading towards the mid-20s. Alts are going to drop tremendously, more than likely. Alts are extremely risky. And then the other take is alts trend to zero over time against Bitcoin. So that's what I have to say in this video. So, yes, bye.